Hi there, you're at Chainlink Wyckoff analysis session, so let's quickly look at the charts and see what they are telling us. And here, we're looking at the weekly chart of Chainlink. Last week we talked about is the Chainlink entering a sign of strength, and it looks like it has reached that point and it's coming down from the sign of strength, so we can take away the question mark. I also talk about after a sign of strength, it's not abnormal to have a bit of retracement. It can be like a shallower or narrower range retracement or a larger range. It's still a normal activity. So after the sign of strength, what happens or what would we expect after the retracement? Hopefully we'll see a last point of support somewhere. This time we have put a question mark for this one, and this somewhere would likely be around this white line. That's the top, around $16, the top of the long-term playgrounds from this white text over here. If I shrink the chart, you'll see basically over the past 5-6 years the price has been trading within this range, and that's the top of this trading area. And after this first line of support, the second line of support would be this. Let me change it to an orange line at around $14.90, give and take. It's always a range, not an exact number. Reason being, of all these candlesticks you see that lay around this very long line, so a lot of candlesticks with their heads or tails over there. That's the second line of support. And eventually the third line of support, there's a weaker one over here before this key one. So the intermediate one would be around $13.50. That I'm not going to put in there, it's just too busy. Maybe I'll revise the charts later on for every single asset that I covered and put in a number to the right hand side, so it's easier for everybody when I talk about the numbers. And this yellow line is around $12.40. That's the three lines of support. And in terms of resistance that we saw the SOS closed below, this is actually extended from the sign of weakness that was developed back in January this year. And here we see it's at around $19.76. That's the currently the boundary, the first line of resistance. The second line of resistance, this purple line over here, is around $20.95. That's extended from the automatic reaction back in December last year. That was the automatic reaction from the buying climax of the distribution cycle back in early December. So that's the big picture. And next is, if we go down to the daily chart, if this is really a retracement from the sign of strength and seeking for a last point of support, what does it look like in the daily? The daily, last time we put in this tag, the second test, like we say, okay, it has come down, or it is like it has reached the buying climax. That was a Tuesday, same day as today, and then immediately the next day it showed us an automatic reaction. That's also a normal stage after the buying climax, and eventually it reached a second test. So a second test, obviously if it's higher than the buying climax, we call it an upthrust, but it doesn't matter how we call it, it's also a test, just that there are more demand and it becomes an upthrust. The key part here is, if we look at the volume, the selling is like between July 22nd, 7th and 28th, the selling was as high as the buying. So that's like a lot of people are releasing whatever they have on hand. And the volume bar today as well is pretty tall compared to what we had last week from Wednesday to Saturday. So even though the candlestick size is more or less the same, the volume is at least like 15-20% higher. So it's not a very encouraging sign, given this long wick at the head as well. So that means a lot of people pushing the price down from above. Good or positive side, there's a little bit of support when the price tries to get below this green line. So it's a battle between the bulls and bears right now around this line at around $17.80. If the bulls successfully defend and there's sufficient demand or good news coming in to boost any kind of FOMO or positivity, then there would be a chance that this develops an upthrust. However, if it doesn't, if the market entirely continues to weaken, then it will come back down to test the three lines of support that I already mentioned in the weekly chart, so I'm not going to repeat. And that's where, so currently, I think it has already entered, or it is showing us a sign of weakness. However, how deep that's going to go, that's a question mark. So it may rebound from here, and there's something we call the last point of supply. So I can borrow potentially, there's one over here we haven't tagged. So let me enlarge this and drag it over here. So a last point of supply is where basically the remaining demand in the market that went in, and then after that the price eventually comes down to the preliminary support and eventually the selling climax. So here, that's where we're expecting to see, besides the upthrust, if there's sufficient demand, there would be an upthrust. But if it isn't, then normally there would be a last point of supply. So I'll put these two tags here. By next week, when we come back, this sign of weakness, we'll know which level it is. If it closed today at around this green line and then bounce up a little and eventually breaks the green line and tests the white line, then we have set the expectation already.